Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York. It is Wednesday, 9th day of December, 2015, and this is the Daily Report for Gold and Silver. We do have gold trading lower on the day, precious metals mixed, but the real story is the dollar. Dollar under extreme pressure. We'll look at that in a second. First to gold, currently trading off about $1.50 on the day, puts it at 1073 and change. The low is 1069.51 and the high 1085.40. Now, it is the high that is noteworthy today at 85.40. We are currently short the market roughly at 1078. We also have a stop at 1089, so we were able to avoid being stopped out, and market, as I said, is back down a couple of dollars on the day. Now, as far as silver prices go today, we're looking at a market that has been oscillating between up a little bit and down a little bit, currently 14.15, the high 14.35, the low 14.13, so we are just off the low. But as I said, the big picture really is the dollar, because when we look at the price of gold as being in essence down $1.50, the real story comes in when we look at the US dollar and how that's been acting, because the net effect, and let's go ahead and pull up one of these dollar charts, but the net effect on this kind of a market is that we've had this tremendous drop in the dollar itself. This is being a weekly chart. You can see the kind of drop we've had over the week. Of course, we tried to stage some sort of rally in the dollar last couple of days, and that has phased out. But when you look at how this lower dollar has affected the price of gold, here's what you're going to see. Although we're looking at about a $2 drawdown on the day, you're gaining about $11 in terms of dollar weakness, and you're losing about $13 in terms of straight selling. So there is some definite selling going in the market, but the dollar is compensating for it almost dime for dime, dollar for dollar. So when we see this down $2, the real net change without taking into account this weak dollar is down about $12 or $13, and that's absolutely noteworthy. So let's take a look at some of the key levels that we're looking at gold, and to do that, I've gone ahead, I've pulled up a daily chart, standard candlestick format, and as I said at the beginning, what was really noteworthy is this high that came in. If you recall from yesterday's show, we talked about the fact that we really wanted to see this market hold this 1080 point, and one of the primary reasons for holding the 1080 point is the way that we have seen this market trade. In other words, it will come down, it will make a new low. For example, here's in September when it made these lows at around 1103. It came up, it made this new high at 1190, and you can see once it broke through this particular point here, meaning the former level of support, let's put a line in there right here, but the former level of support, we drifted lower and then actually found support at a new low. We had a low that preceded the low of 71. But really what we're seeing is stair steps. So what I mean to say by that is this level right here and here would now become resistance. Of course, it was never really tested because the market kept going down. But then once it broke and hit this low, we had to look at these series of price points, I should say, the series of price points that kind of coalesce with these highs up at around 1180. So whereas we had potential support at 1080, once the market came down, it basically created a new ceiling or a new floor, depending on what side you're looking at it. We now have a floor that is sitting roughly at 1050, but we absolutely have these highs up here in the mid 80s that, if challenged and are taken out, this area right here would then become support again. But as long as we see this market kind of trade up to this point and then back off, we absolutely know that we have a ceiling and a level of resistance in this area. So traders, last, I do want to look at another daily chart. Now this daily chart, let me try to scale this a little bit better, has a basic channel in it, a linear regression, so to speak. And what we're looking for is it's basically a bear channel. It gives us an idea of the slope or magnitude of the market moves itself. It's off of daily charts, as well as giving us parameters to kind of look to see where in the channel the market sits. Now, obviously, this is broken above and below this channel, this being our midpoint here. but we went back to the upper level of the channel. We actually came and tested these highs, but now are well within the channel. I would look for the market to move back down towards this channel and do it in a slope, meaning a tact that's not that stiff. In other words, I'm not looking for a huge price decline quickly, rather a decline a little bit slower over time. This has been Gary Wagner, wishing you, as always, good trading. Maintain your current long position, maintain your current stop. We'll talk to you tomorrow for another daily update and review. Bye-bye.